Good morning, traders. Welcome to the Phoenix Blue Morning Update on Friday, the 19th of February. We'll be having a look at the usual suspects shortly, and we'll be talking about how the markets appear to be waiting for the hugely significant March FOMC and ECB statements. We're going to start by going over and looking at the news. Yesterday, from the States, three news announcements all falling in and around expectation, that being the Philly Fed manufacturing, unemployment claims, and crude oil inventories. So we didn't have a lot of reaction from the dollar to those news announcements. This morning we have the British pound retail sales, and then this afternoon at 1:30 we have the Canadian core CPI, core retail sales, US CPI, and the US core CPI figures. For traders who follow us closely, we are currently in a resting or have a resting order on a US dollar CAD trade. Price is very near the entry at the moment, so we would want you to review your appetite for the risk of volatility triggering you in on that trade, and would suggest that you consider either the level of risk or whether you want that risk at all. Okay, over to the Asian markets. The US dollar, Chinese yuan, very much what we've seen all week. Price within the boundaries of Monday's big bearish bar. So nothing really further to report there. The Shanghai Composite price is back up, is still around the 2015 lows levels, which is the level of interest. I said yesterday that we really needed to see a significant close above that level in order for our view on this market to change, or to be able to glean any further indications from it. Similar picture on the Nikkei overnight. It's been, after a significant move on Monday, it's been very quiet, range-bound trading. Okay, crude oil yesterday had a strong bullish day, predominantly driven by a very brief rumour almost from an Iranian oil minister that Iran might be considering coming on board with the Saudis and the Russians in restricting supplies of oil, the restriction being purely not to increase January production levels, or from January production levels. The market really overreacting to what would normally be a comment from a source that wouldn't generate any sort of interest from the market. Okay, mentioned earlier the US dollar CAD trade. What we can see here is our entry, how close price is to that entry, and just to reiterate that we will be reviewing our appetite for that risk prior to the 1:30 news announcement. One trade that triggered the day before yesterday and had another move up yesterday was the cocoa trade. Quite happy with this. Yes, it's a pin bar type thing, but unlike the FX markets, that's more typical of the commodities markets. We trade these markets with the commitments of traders analysis, our own version of that, and we also, as you'll see by the size of our entry there, use a significantly larger risk dimension than we would normally or we would on FX. Now, I said we were briefly going to mention the markets relative to the ECB and FOMC statements. What we're seeing in the markets at this moment in time is a high level of volatility to the merest type of news announcement or comment or even press report, but that volatility within defined ranges. We're of opinion that that will continue through to the mid-March announcement by the FOMC and the ECB, which will be significant for the next quarter or even further into the year. I'm sure traders are hoping that we will see divergence between the FOMC's policy with maybe some sort of indication of a more positive view to increasing rates through the year, and conversely with the ECB, an announcement either to reduce the already negative interest rates or an increase in the extent or nature of the asset buying quantitative easing program that's been underway for a number of years, with Mario Draghi repeating his famous "I'll do what it takes" comment. So we are seeing some really strange movements in the market. It's a nervous market. We are predominantly not trading in the FX markets at the moment because we just see the risk there as being too high through that volatility. We always have a focus on commodities, but probably at this moment in time we are more commodities traders than FX. As we speak at the end of this week, we have the cocoa trade and the sugar trade, and we will at the weekend be using our fundamental technical analysis in conjunction with our commitments of traders analysis to look for opportunities in that market where risk is lower. Okay, just a brief note that if you have any questions, you want to know anything about Phoenix Blue or anything we specifically talk about, the charts for etc. If you've got a specific question, please email us at info@phoenixblue.co.uk. Keep an eye on Instagram, regular updates through the day. Also on Facebook, and we're really hoping the website will be up and running very shortly. Okay, so that brings us to a close of another trading week. Thank you for listening, and we look forward to speaking to you again next week.